But one farmer says, seems to me there was a tea party in Boston that was illegal too.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
So, and I said, well, what if it does happen? And he says, well, price will solve everything. I said, thanks, give me the gold.
Why do central banks hold it?
Well, it's a form of reserves.
So why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money.
Good evening. Welcome back to the Junius Maltby Channel, the most boring channel on YouTube. The extemporaneous ramblings of a madman broadcasting live and unscripted, ill-prepared, and with, well, subpar equipment at best. Glad to see everyone here in the chat. Thanks for joining me. Yes, all of the OG Junius Maltby stacking community here. I've got many channel members already present and accounted for. We've got Kevin James Hanford, Dr. Shafty Lou Sassel, Bill Spencer with the wrench, ready to yield it. Forgotten Creation, good to see you as well, my friend. James Richter, hey friend, hey friends. Welcome in the house. Some of you will probably be filling in as I start discussing things. And an old channel friend from way back, from the first days, a few of you. I've got Riqua in here and Napalm Death. Awesome. Good to see you both. Brick Stacker, let's go. I've got several articles, headlines, topics of conversation, news pieces, things to discuss. I didn't pull up a lot of memes today. I should have, I could have, I didn't. You probably see the same ones I do. Mrs. Maltby sends me memes all the time. What I do have pulled up on the screen currently, it's not an original. It's not real. It's not even mine, the one that's in the picture here. This is an eBay ad. I took this pic from. Intaglio Mint came out with these a while back, and I believe at some point I probably did see them. I part of my mind believes that I've seen these, and I was like, oh, I'll get around to it. I'll get one of those one day, and I never did. It's their thick 2-ounce pillar dollar replica, and they do a phenomenal job. At Intaglio, I don't know how they do it. It's like they took the original dies when they make some of the coins. If you've seen some of their recreations, they're phenomenal. So we're starting today's video off with a nice coin, some silver stacking news, I'm going to show you my latest acquisition, and it's one of these. It hasn't come yet, but it's my most recent silver acquisition. It's a thick 2-ounce round because old Junius can't afford a real 1733 pillar dollar, without spending a significant amount of money on the numismatic front. Although I do believe they're worth it, I truly do. Many of you are aware if you've been on this channel for some time, and we're going to get to the story here in a minute. The pillar dollars are probably some of my favorite silver there is. There's something mythical to me about Spanish silver from that colonial time period. Anything from about that 1680 mark, we'll call it 1650 to about 1740. That range, that 90 years, let's go 100 years, 1650 to 1750. That 100-year range, that century that spans that, is just fascinating to me. What was going on in the world, the trade that was taking place, all of it, the golden age of piracy, a lot of history, just major movements taking place on the planet that set the course for the world we live in today, of course, because it was history. Thank you, James Richter, throwing down a bunch of gifted memberships to people. Generous friend, generous good man of the channel. He's out there. He's like an apostle of the Junius Maltby Channel, just like recruiting other people to the gospel of sound money. I love it. Good for you, friend. So I picked one of these up. The way I came across it, I was actually scrolling around looking at real pillar dollars, and I saw the Intaglio Mint pillar dollar 2-ounce tribute round. And I said, you know what? Why not? It was a really good price. It was less than many of the other ones on here. It came with its capsule, and it was from a reputable seller. Of course, it will go through all of my tests. I will weigh it. I will do the magnet tests. I will do everything. I will test it before, leaving feedback and such. But it looks very legit, and I'm sure it will be. But yeah, I picked one of those up because, as I stated, this particular era of coinage fascinates me. And with what was going on in the world recently with the news, I just wanted to be, I wanted to do my own little personal raid. So I did. I ended up acquiring 2 ounces of silver, taking it off the market just to make things a little bit more difficult for the powers that be that are trying to control things. And, I wanted to burn some fiat, to get rid of some of those trash coupons. So I did. And yesterday, I was just doing some reading. Sometimes I like to sit down and just read about certain coins. I wasn't doing a video or anything. And I came upon this article, The Spanish Silver Dollar, the world's first universal currency. If you've been on this channel for some time, you're familiar with that. I've shared with you how, in my opinion, in my view, the Spanish silver dollars, there's really no comparison as far as the role in history and the lineage, the genealogy, if you will, of the U.S. dollar, even in word. The word dollar itself. I've done videos on this, so I don't need to get us lost in the weeds on all of that. But all of it ties back to even the weight and the purity and the size to these particular coins. So they're very important. They're very important, in my opinion, to the history of global economics, global trade, how humans interact with coinage, the very images that are on coinage, the words we use to describe coinage, and just the symbolism behind it. There's a lot to it. But I found this piece very interesting because it shared a lot of that sentiment. Perhaps no other single object represents the global economy in the 18th century better than the Spanish dollar or 8 real coin, or as many of you might be familiar with, the pieces of 8. It's approximately 1 ounce in weight and 1.5 inches in diameter. These coins, also known as pieces of 8, were first minted in the Spanish Empire beginning in 1497. Now, the reason that's important, ladies and gentlemen, think of the time span that these were money. All right? These were traded in the United States. Again, I'm repeating myself from videos in the past, but until the Coinage Act of, 1857 in the United States, you're looking at close to 400 years. And if you go back and look at the thalers of Germany, the silver there that these Spanish dollars were even patterned off of in ways, you're looking at almost 400 or 500 years of continuous trade in the economies of the greatest powers on earth at the time, all of them with gold and silver, but the mainstay, the main liquid currency within the economy being these silver coins for goods and services traded. So again, just a fascinating thing. We're not going to read the whole thing here. I'm not going to read much of it at all, but I've gone through chop marks with you and the symbolism. The Potosi mine, we've talked about it, did a video on that. The mine that eats men. 8 to 9 million people. 8 to 9 million people died in and around that mountain in Bolivia, extracting silver. A lot of it was just because of a lack of knowledge on chemicals and giving themselves all kinds of poisoning during the mining process when they were, what were they doing? They were like cooking mercury and doing separations. Just a lot of tragedy took place there. It's sad. It's a very sad history, but very influential coin nonetheless. And it's one of the reasons that by far it truly represents one of my favorite coins in the world. And I find myself struggling at times with not throwing down and just acquiring, another original piece of 8, because I have a couple. None of them very remarkable specimens, because when you get into like a 1732, like a first year pillar dollar, or any of the really early ones, 1732 to about 1739. Some of the stuff from like the Hollandia wreck or the Roosevelt wreck, because the shipwreck ones are very fascinating indeed. And if they're graded and authentic and of clear, good design, very, very fine details and such, you're getting into a price range that's quite prohibitive for people like us, especially when you look at how much silver, real silver, you could acquire if you chose to go that route. So enough of the old history, right? Enough of the boring coin stuff. But let's move on to some news, right? A friend of mine brought up a really good point. Friend of this channel, you see him in the chat quite often, and we're gonna start here. We'll stay with the history theme for a bit. I've shared with many of you some of my authentic Roman coinage. We've talked about the collapse of the Roman Empire, the economic factors that led to that. That shouldn't be foreign to any of you. If you go back in the archives, again, channel members, if you have a coin after your name, you have access to this stuff. And some of those videos might be available. Depends how they're categorized. But a lot of the videos are now members only, and they're in the archives. And I've done stuff on the Roman Empire and the economics of the time. But this is a new graphic to me. Although I've explained what you're seeing here visually, and I might have even found graphics very similar to this. But this is the grams of silver per denarius coin. And this is the left axis of the chart starts about 250 BC. The right axis goes to about 350 AD. So it's about 900 or so years here we're looking at. Is that right? 250? No, 7, whatever. We'll do 250 and then 350. Add that up. What is that? What, 650? 700 years or something like that? Yeah, 600 years. We'll go with that. We'll go with 600. It's 600 years. It's late. It's late in the evening. I haven't even had my tea. Mrs. Maltby. What? Paging Mrs. Maltby. I heard the kettle boil earlier. Did you pour the cup of tea for me then? Oh, I forgot. There you go. See, she forgot. She forgot. It's all right. It's all right. I love you anyway. She's building a little Lego set for herself. She treated herself recently to a little Lego set for ladies. She really loves the Disney stuff, and she found a little Disney Lego set. So she's in the kitchen assembling that. She had a long day at work, and she's doing that. Simple things, right? All right, back to the denarius. I've shared with you I've got some original denarius. They're pretty common. I mean, they're all over the ancient world. Pretty much anywhere the Romans were, they dropped, stashed, or hoarded, or lost coinage. And some of the denarius are so common that they're affordable, and you can acquire them for not a significant output of cash. Well, thank you, Mrs. Maltby. I'm glad it's here.
Is it cold?
No, it's still perfectly hot. It wasn't that long ago. So what do you notice about this chart, friends? What do you see here? What are you looking at here? You got the denarius. For a long time, it was pretty stable. Just shy of about 4 grams of silver. About a day's wages. Again, I've gone over the purchasing power of an ancient denarius over different times in the Roman history. But for quite a period of time, it looks like from about even before 250 BC, almost to around 50 AD, right? Close to 300 years running, it was a consistent amount of silver in that piece, in that coin. When you get to about 64 AD, you'll see Nero starts debasing the denarius. And as you know, the Roman Empire was expanding. It was very militaristic. It was engaged in many confrontations at the peripheral borders of the empire, engaging barbarians and Visigoths and Vandals and the Britons, trying to invade and take what we consider now the British Isles and Germania and the Gauls and France. They're all over North Africa. They're heading east into parts of Persia and such, and trying to subdue and conquer what many would call, the Palestine, the Palestine region, and that's expensive. troops, logistics, soldiers, and the costs there of paying their salaries. That's the cost of empire, right? And in one of the ways in doing that, they would tax, and if that wasn't enough, they discovered and figured out how to debase and devalue their currency. They could put less silver in the coinage. They began issuing less pure silver. They began issuing bronze coins. They would then coat bronze coins with silver, and eventually, towards the latter end of the empire, as it was collapsing and falling apart, there was many of the coins were zero. There was no silver, and they were just issuing bronze coins. And as you can see there, the amount of silver contained in the denarius just begins to dwindle. It's dropping. Nero, again, debasing it 64 AD. You've got Septimius Severus reducing the silver weight to 1.82 grams. So that's like almost 50% reduction in the amount of silver. And then around 215 AD, Caracalla just strikes the double denarius. But again, later on, by the time you get to the 350 and 400 AD, there's again no silver in them. Now, the U.S. currencies and the U.S. dollar, as many of you know, it couldn't make it even more than, 150 years? This Coinage Act of 1792, when we get to 1933, they're already banning gold, forbidding U.S. citizens from owning it. Federal Reserve had been founded in 1913, taking the power to coin money and issue money away from the people, away from Congress. And in 1964, they eliminate silver and currency altogether. In 1971, Nixon closes the gold window, forbids foreign transactions to be redeemed for what they agreed upon, which was gold. He, quote, temporarily suspends the convertibility of the dollar into gold. So he violates Bretton Woods. He violates international agreements. He no longer allows gold to flow out of the U.S. Treasury. And the dollar at that point became the fiat trash coupon, the cocaine and feces-ridden paper that we see today. Unbacked, worthless fiat trash that can be inflated infinitely, which is what's happening. That's why we've talked about debt, the deficits, the interest on it, and how it's all just a big joke now. It's laughable. There is nothing there but the faith that idiots put into it. And believe me, look around you and realize the people that put a value on the dollar. Look around you for one moment. Examine the surroundings when you're out in public and realize these are the people that value the dollar. They don't know anything. They don't know what's real, what's not, what to value, what not to value. It's disgusting. I mean, they're truly most people, they're just, when they have a conversation with you, it's just a remix of headlines and propaganda pieces they've picked up off of the news networks, the mainstream media, or whatever other garbage that came through their little cerebellum as they were going through schools. They don't have a concept of what's real, what's not. And the U.S. dollar, again, 50 plus years in this fiat realm that it's been in, and we're entering a stage in which it's dying. It's very obvious, and we're going to see that tonight. More evidence of that tonight as we go forward. As I shared with you, one of my friends is really into this. He's really into the Treasury thing, and so he sends me Treasury links a lot, and he uses them as an indicator of what's going on. And this is one of his charts that he really cares for, and he sent me recently. The 10-year Treasury constant maturity minus 2-year Treasury constant maturity. And he uses this as an indicator. He believes that and a lot of the analysts out there as well do so, that this is the textbook start of a recession. And the indicators are flashing everywhere. This here, the accelerating out of this 10-year to 2-year bond yield inversion, is a big indicator to him, and you can see it here on the right side. The 10 years, the constant maturity, minus the 2-year Treasury constant maturity. As we see this bond yield inversion taking place, he's stating that this is a major indicator that we're nearing recession. And I think this is possibly why we're seeing the suffering in some of the major corporations, companies. We're seeing layoffs, unemployment ticking up. It might be why the Fed panicked yesterday and did that 50 basis point cut for the Fed rate. They don't have inflation under control. I mean, what are the two jobs supposedly that the Fed has is keeping unemployment low and keeping inflation low, right? That's like their mandate or whatever. Well, we know that they've been horrible at keeping inflation low. Inflation's still out of control. I mean, go to the grocery store and tell me that they've gotten control over it. Look at prices around you, compare prices to anything, and ask yourself if they've gotten inflation under control. No, absolutely not. It's impossible. They have not. They will not. They cannot. Thank you, Russ Jordan, my friend, for the super chat, the support, generosity towards the channel. There he goes. Off topic, but thought earlier today, if we've no borders, we've no country. If we've no country, we needn't government. If we needn't government, we needn't pay it any money. Buy silver instead. That's a very solid point. I like that's a very brilliant and logical explanation of that. I agree with you. I do. We don't need them. As a matter of fact, they make things worse, it seems, don't they? They seem to just make things worse. Truly, they do. Now, the Fed, as we know, they're not controlling inflation. Inflation, again, there's no way to know. You hear different opinions on what it is every single day. And I know you can go to Shadow Stats and look at what they tell you inflation is. We can look at like the pre-1980 numbers, the 83 numbers, the pre-1990 or whatever, 91 numbers. There's all these pre-this numbers. And what is the consumer price index? What is true inflation? What's the basket of goods? It's much more than they're telling you. Let's put it that way. They're lying. We know that. We know that none of the numbers they tell us are ever accurate and true. None of the experts know what they're talking about. And we're going to look at one of the experts that I do trust coming up here in a few minutes. But, the thing that's taking place now, one of the geopolitical backdrops to all of this is the United States and its posturing, its warmongering. And as many of you know, that the dollar debasement that we're experiencing, it has to happen because they need this. They need to do it in order to be able to afford the amount of war that they're secretly waging. There's a lot of wars going on around the planet, and as you know, they're shoveling a lot of the money out of the Treasury or taking on debt. I don't know where they're getting it from towards these multiple front conflicts around the world. They're trashing the United States currency, the dollar, in doing so. Eventually, they're going to have to cover this somehow. And I think that as we move forward, one of the big ways they're going to cover it is through a great war. A war is the way to cover and to blame the economic ramifications of their actions on it. It's a great cover to blame currency debasement on it. Once they can get a big war going, everyone's mind will kind of turn from things and they won't really pay attention to inflation anymore. Or they'll blame it. They'll be like, oh, that's why groceries are expensive. It's like, no, idiot. The groceries were expensive for 3 years before the wars started. But they're definitely steering us in that direction. This is the kind of stuff that's been happening forever. This has been happening for a long time, since the Roman Empire. I just showed you that chart. Especially the Roman great currency crisis of the second half of the 3rd century AD. We just looked at it. That's when the Romans were at constant warfare with the Germanic tribes, the Parthians, the Middle East. The Romans were, and go back to it real quick. Where is that? Where is that chart? Where did it go? There it is. Can you see it? Yeah, there it is. It's not centered anymore because I had to adjust the screen, but that's the same thing. And you're going to see it happen continually here in the United States. Because layoffs have begun. I know that they're trying to tell you that and I'll show you that headline in a minute. Hold on a second. Let me get this centered. Headline after headline. Headline after headline here. You've got layoffs in Atlantic Music Group. You've got layoffs at Boeing taking place. There's Nationwide. I've got Nationwide pulled up. That's an article coming up here. I informed many of you recently that there were huge layoffs taking place at some of the platinum and palladium mines. General Motors, 6 hours ago, announcing hundreds of temporary layoffs at a Kansas City plant. Bay Area tech layoffs. That's just within the last day. 280 employees. So there's layoffs beginning to percolate around the economy. And rising unemployment. Okay, it's in the news. Rising unemployment and weaker U.S. jobs market could dictate the pace of Fed cuts. I think this is one of the reasons the Fed cut the interest rate yesterday. And the way they did it was, to me, indicative of not a controlled posture, but more of a panicked reaction. I think that old Jerome Powell, behind closed doors, is a little bit hysterical. He might punch his pillow at night. Maybe he's crying. I don't know. Maybe he's not well. We'll put it that way. He's not well. Oh, here you go. The Federal Reserve has two jobs: keep inflation low, keep unemployment low. That's what Congress requires by law. Congress isn't in charge of anything. They don't call any of the shots anymore. They just occupy a seat. All right, it's for show. Job number 1 has mostly been accomplished. Wrong. Job number 2 is in more doubt. Both not working, not doing well. The yearly rate of inflation has slowed to 2.5%. They believe that. They write this stuff. I wonder if they actually believe it. No, inflation is not 2.5%. Okay, look around you. It's not. 40-year peak is 7.1% from a few years ago. They really believe that. It was 17. I mean, everything we've looked at indicates that inflation was cooking at over 20%, 22% on some things, 25% on others. Show me something in the economy that over the course of the last 4 years has only gone up about 7%. Please. I mean, the current rate is not far from the Fed's 2% target, which is not true, is not occurring, not happening. I shared with you on the last video the rise in gold price. And just look at gold and silver prices. Look at the gold chart with the U.S. debt chart, how they correlate. What is it, a 0.9% coefficient? I mean, they're married to each other. The U.S. debt and the price of gold walk hand in hand. Again, I think the Fed panicked. That's what took place. He saw the unemployment numbers. He saw what was taking place nationwide, planning a 5% reduction in employee headcount. That's massive. A massive company laying off 5% of their people. So Fed Chair Jerome Powell. Oh man, is he a racist? Jay Powell's a racist. Tweet that hashtag Jay Powell's a racist. Look at him. He's saying racist things. This is the kind of stuff that causes problems. This is what causes, the people to rise up. These are irresponsible words. This is insensitive. I'm offended. Jay Powell, you offended me. Look what he said here. Can you read that? Fed Chair Jerome Powell blames the influx of illegal immigrants for rising unemployment rate. I wouldn't say he's wrong. As a matter of fact, he's probably right. But that's the kind of rhetoric. That's the kind of rhetoric. I like when they use that. When the media uses the word rhetoric. That's the kind of rhetoric. No, it's incredible that he would even say that. I wonder if he was drunk. Well, that is a good tea. It's like a spicy fall blend, I think. It's like whatever. Cinnamon, cardamom, chai, whatever those types of things are. Maybe some ginger, hint of that. Fed Chair Jerome Powell blamed the migrant crisis for the nation's growing unemployment after cutting the benchmark interest rate. Shifting blame. Come on, can you blame the guy? He knows that his policies, his people, are to blame. He knows that the political structure that he operates in is responsible. He knows that's not the migrants' fault. I mean, come on now. What do you think they might have a tiny bit of effect, but let's put it this way. I don't see many Americans lining up to go pick strawberries in the sun. You don't see very many Americans lining up to go, pick cherries and apples or spinach and Brussels sprouts or go roof a house. I saw a couple houses being roofed recently, and let's just say they weren't Americans doing, or they weren't. People who've been in this country for a very long time, anyways. I don't think that the unemployment that we're seeing, Like, do you think Nationwide just hired a bunch of migrants? Do you think a bunch of Dominicans and Haitians just suddenly are now working for Nationwide? Or GM? Or GE? Or whoever else? You think any of these companies that are laying off individuals are in turn hiring migrants that just came over the border that don't speak English, might not have many of the skill sets required for the occupation or the career that they're laying people off from? I highly doubt that. I just don't see that as being the case. I know that a lot of jobs are exported to other countries, call centers and tech jobs, things like that, especially places like India and elsewhere. But I think what he's doing here is he's shifting blame. He's trying to not take responsibility, and that's just not a good trait. Most people learn early on in life, you got to take responsibility for your actions, your mistakes. You got to own it. And I just think that the Fed's not good at doing that. I also think that anyone in Congress or the executive branch, none of them are good at taking responsibility. They love to claim their successes and broadcast their successes, but as soon as there's a failure or a mistake, they don't like to own it. They like to shift it or blame others. And that's what he's doing here. He's blaming the migrants because, well, who's he going to do? Blame the Fed? Blame the central banks? Blame the very system that he's a champion for, a cheerleader for, an architect of? No, he's not going to do that. He's not. So I would argue that he's wrong there, and that he's shifting blame for, well, he doesn't want you yelling at him. He doesn't want you getting mad at him. It's an election year, for crying out loud, even though he's not in an elected position. But don't worry, Wall Street Journal, the WSJ, the Wall Street Journal is saying, don't fear the unemployment rate. Don't be afraid of it. Ignore it. Who cares how many people are unemployed? Don't even, if there's soup kitchens, if it's like the Great Depression, don't be afraid of it. Come on now, just have some normalcy bias, drink it up, eat it off a spoon, and listen to people like the Wall Street Journal. You know, these are the same people that were telling you not to worry, that the housing is sound, the mortgage crisis is contained, and everything's going to be okay. Were you alive back then? Are you awake? You remember 2008? Do you remember when these people were lying to you about those things? Pro take. Don't fear the unemployment rate. Higher rates of joblessness could be a sign people are coming off the sidelines. So don't fear it. Don't worry about it. This is a good thing. I love when the Wall Street Journal and a lot of these outlets, they'll take negative news and they'll try to flip it and spin it and tell you that it's a good thing. It's a good thing. Don't worry about it. Forget about it. That's a good thing. You want that. Yeah, you want that. It's good when your car makes that sound. It's supposed to make that ticky-clicky sound. Forget about it. Forget about it. That's what they're trying to tell you. They're like gangsters. It's a mafia tactic. Bunch of clowns. But here we go. This is from Zero Hedge. Let me see if I can get this up. Let me see if I can get this to where you can see it. I gotta do all my own technical work here. Here we go. All right. Why, oh, why are yields surging? This is what we talked about. Oh, yes, the U.S. interest to hit $1.6 trillion by year's end, making it the largest U.S. government outlay. Can you imagine that? The biggest expense, the biggest cost for the U.S. government is going to be its interest on the debt. Maybe that's why they're cutting the interest rate. They can no longer afford it. It was getting out of control. Makes you wonder, makes you think. Could that be a motivation for J. Powell to cut the rate? It would make sense. But there's other news. Maybe the housing. Because this set the whole thing off on fire supposedly last time, right? August home sales dropped more than expected as prices set a new record. Now, August home sales dropped. Again, interest rates were too high. I think the prices, a lot of it for materials and labor, I think inflation had a major part when it came to driving housing prices up. Not all of it. A lot of it was supply-demand stuff. We had all that easy free money flowing around from the COVID years. Remember all that stimulus? There was tons of money out there. But home sales were 4.2% lower in August than the same month in 2023. That's a pretty big difference, pretty big drop. There was 1.35 million units for sale at the end of August. That's up 0.7% from July and 22.7% from year over year. The median price of an existing home sold in August was $416,700, up 3.1% from August of 2023. So housing went up on average. That's just an average. In some areas, it was even more than that. But home sales are beginning to drop. As a matter of fact, some areas, again, they're giving you averages here, but in some areas, they are witnessing and seeing prices dropping. People are cutting their prices on their houses. I was actually familiar with a few that I wasn't looking at them as a potential buyer or anything, just out of curiosity, perusing real estate prices in my vicinity. And there was a few, they were cutting the prices around $10,000 per, I think it was a month. And it was month after month, 10 grand was coming off these houses. Boom, boom, boom. They still haven't moved, haven't sold. No interest, no one's buying them. They haven't moved at all. I think a lot of that, again, the interest rates, maybe him cutting rates is going to spark a little bit of interest for people to refinance and buy, create a temporary fervor of people running back and trying to stimulate the economy in that way. We'll see how it works. We'll see if it works for him. Rabobank goes ape on Powell's Orwellian rate cut. Some hilarious and absolutely spot-on excerpts from the reaction note by Rabobank's Fed watcher Philip Mary, who clearly isn't getting invited to Mariner Eccles' Christmas holiday party this year, I guess. Here are the highlights from the report, which equates what Powell said with the worst parts of 1984. If there was a strong case for a 50 basis point cut, Powell did not make it at his press conference. He repeatedly stressed that the U.S. economy was strong, but we should see the strong move as a commitment to keep the economy strong. Doctor, we'll give you extra strong medication. Patient, is my condition bad? No, you're healthy, but we're committed to keeping you healthy. That's the logic. That's the reason, the logic train that he's got on there. In the end, it looks like Powell felt the level of the policy rate was out of sync with the progress on inflation and the rise in unemployment rate. After all, he used the word recalibration several times. Apparently that's his new buzzword. Have you guys seen that? The new buzzword for Powell is recalibrate. He's recalibrating the economy. He used it several times yesterday. This was also evident in the FOMC's projections, now showing a 100 basis point reduction compared to the pre-meeting level of the target range, rather than the 25 basis points in the June projections. Although Powell denied that the Fed had fallen behind the curve, this is exactly what recalibration means. However, the latter obscures the former, and Powell did not want to admit that they should have cut 25 basis points in July. It got really funny when he said that the FOMC had been patient in waiting, and this allowed them to make a strong move. Yes, if you get behind the curve, you have to make a big leap forward to catch up. Again, someone else sharing my idea here that I think Powell is panicking and panicked yesterday, and that's what we witnessed take place. The recalibration argument is clashing with the message this large cut sends. When asked during a Q&A what his message to the U.S. consumer is, Powell said that the U.S. economy is in a good place, and our decision is to keep it there. Really? A 50 basis points cut as a message that the economy is strong? So if they cut by 75 basis points, that means the economy is booming? This sounds like something out of George Orwell's 1984. War is peace, freedom is slavery, ignorance is strength. Understandably, a reporter asked whether the 50 basis points cut meant that he was more concerned about the labor market than inflation. However, Powell denied this and said that the risks are roughly balanced. This exchange underlined the problem. It's Fed speak. Again, people need to not have any faith in anything the Fed is doing. Hopefully you know. I know none of you do. Every single one of you in the chat, I know, you have no faith in the Fed, and that's beautiful. Beautiful. This is where you want little faith. During the press conference, Powell had trouble clearly explaining the reason for the large cut because he did not want to admit that his, quote, recalibration was needed because the FOMC had fallen behind the curve. Meanwhile, the large cut seemed counterintuitive to the repeated claim that the economy is strong. I think it's not. What are they going to do? I mean, could you imagine the markets if Powell was up there panicked and said that the markets were not strong, the economy was weak, the economy is not strong, we're facing problems, we're having serious trouble in the labor markets, inflation's worse than we thought, I don't know what to do. Imagine what Wall Street with the Dow and the NASDAQ would look like 5 minutes into Powell having, apoplexy up there. I don't think it would look good. In the past, the Fed only cut 50 basis points at the start of a cutting cycle in case of a severe deterioration in the economy or markets, such as the dot-com bubble and the global financial crisis. See, that's why I think we're on the verge of this. I think we're on the verge of a recession. We're entering a recession, and the proof of that is the rate cut. They just can't tell you that. They've learned their lessons. They can't be honest. They have to lie. They lie in everything they do, and he couldn't be honest with you. He can't be honest with the media. And it's for your own good. Again, it's for your own good. They don't want to cause a panic, so they have to be a little bit less honest. Okay, he's recalibrating their honesty, or what it means to be honest. We're going to reinvent what it means to be honest, and when it's necessary in government. Sometimes it's necessary to be dishonest in government. It's encouraged, as a matter of fact. It's for your own good. They wouldn't want to set off a panic. See, that would just be bad. That'd be wrong. So there you go. That's why. Anyways, the large rate cut took place because the economy is sick. That's why. Because things are coming that they don't want you to know about. There are things that are in motion that cannot be undone. And those things that they set in motion have been set in motion over the course of decades. They were purposely done. There are people with names who are responsible. There are policies that were in place. And all of these things were done by the political apparatus, the financial apparatus, the military-industrial complex, and all of their minions, all of their, I can't even name some, I'm not allowed to name the names, all right? You can look them up. There are certain powers and entities that are deeply rooted in the United States government that control nearly every facet of its decision-making, whether it's its foreign policy, its military expenditures, the interest rates, the flow of wealth and currency, who gets it, how much, and how the entire system works. And they're responsible for destroying this economy and for destroying this nation. They're the same people that opened the borders, that are encouraging the dilution of this nation state and its culture, destroying its language, its values, its safety, its security, everything that made it great. The founders knew this. They identified it. You can read their writings. Nobody reads those things anymore, though. Now, this is an old piece. I believe I even shared it with you. But this is what we're going to close on today. For years, I've told you that we're entering a multi-decade. We're not entering it. We're in it. A multi-decade bull run for gold and silver. I told you just look at it. Just trust it. Don't take my word for it. Don't invest based on my opinion on this channel. Do your own research. Read your own materials. All I do is I take things that I read. I peruse the news. I gather things. And I've been doing it for a long time to just kind of get an idea of where this is going, what I can do that's best for me and my family, my future, how I can best control and save my wealth and store my labor. And I've made decisions based on it. And then I share it with all of you. And I've told you this is a big long, the biggest long. That we weren't wrong, we were just early. It's ticking by slowly, but one of these days it's just going to give out. You're not going to have a whole lot of warning. We're not going to know. Believe me, I'm not even going to be able to get a video up fast enough when the bottom finally drops out. I won't be here for you. We're all going to be on our own at that point. I'll try to log in at some point within those hours, but you've seen how quickly things move these days. Now, this is an old article, I said, May 28th. So this is earlier in the spring. Big short investor Michael Burry just made a multi-million-dollar bet on gold and dumped tech giants Alphabet and Amazon 3 ways to add the yellow metal now. So he did a big long on gold. I think that's brilliant. That's wise. But not even Michael Burry gets it right 100% of the time, but he's a smart guy. I think he identifies trends. He knows numbers. He knows what's going on. He's an interesting character. But one of the things, when I was reading about this, about Michael Burry taking this large position in gold and dumping some of his tech stocks, was this feature that Sprott Physical Gold Trust has. And I've got it here pulled up on the screen. A unique feature of the Sprott Physical Gold Trust is that investors have the right to redeem their units for physical metals on a monthly basis, provided they meet the minimum redemption amount. This requirement is quite substantial, as a unit holder must have enough units to equate to one full-sized London good delivery bar, approximately 400 ounces. Quick quiz, ladies and gentlemen of the Junius Maltby Channel. How much now is a London good delivery bar worth? We talked about this yesterday. I want to see it in the chat. Come on. I'm gonna wait. I'm gonna take another sip of tea. What's a London good delivery bar going for these days? Let's see. I'm waiting for it. Forgotten Creation wins. They get that one. They got it. First one to say it. And Riquaz second. $1 million. And yes, G-Dub, about 1.1, because they range. I mean, a London good delivery bar, if I'm not mistaken, can weigh anywhere from 350 to 430 ounces. But their goal is to nail it right around 400. You'll see a lot of them like 399.9 or 401 or 418 ounces. But 400 ounces, it's $1 million a bar. So if you do a withdrawal from this Sprott Physical Gold Trust, you need to have $1 million in there. Minimum, if you want it. Otherwise, you have to get paid out in cash. I would take delivery immediately. See, I don't know why people buy these gold trust things and trust someone else to store it and have it. I mean, if I was going to go out and buy $1 million in gold today, Junior, I would just order 2 monster boxes. 500 ounces each, 1,000 ounces. Oh, that's 2 million. Sorry. I'm thinking old school numbers here. I remember when you could get, dang it, man. I remember when a monster box of gold was about 500 grand. Can you believe that? Can you freaking believe that? 500 ounces, $1,000 an ounce. Not anymore, ladies and gentlemen. Not anymore. Do you remember that story I told you guys years ago? I shared it with everybody here once. I was in a coin shop once. It's an old story here. It's like the old guys, Like I'm getting to that age where I tell the same stories over and over again. There I was standing there. I was in a coin store. I was buying myself some Mercury dimes, and I was at the counter there. I was waiting in line. This guy walked in. He's standing there. He's, I'm here to pick up my order, and he goes up to the counter there, and they hand him a big old red box. Anyways, this guy walks in. He's picking up his order. It's 500 gold maple leafs. I'm going to go back in my head here. I'm thinking back. They were, at that time, gold was about $750 per ounce. He bought 500 ounces of gold at $750. So he spent around $375,000. That old man. He wasn't that old, but he was old to me because I was younger. So those 500 ounces today, if we just do 500 times 2,600, just 26, that's 1.3 million. That guy's made almost a clean million. If you add because I know that right now on a lot of the sites, gold's around 2,800 to 2,900 an ounce if you're buying rounds individually. That guy made $1 million. $1 million. Now there's people that would call him dumb. They'd call him stupid. They would say he was wrong. He made a mistake. Or they come up with all kinds of other places. He could have done this with that money. He could have done, hindsight's 2020, tough guy. He could have done this. He could have done that. He could have bought this. He could have bought that. Okay, so are you. What'd you do? That guy's sitting on 500 ounces of gold. What are you sitting on? What do you got? You know, a pot to piss in or a window to throw it out of. You couldn't pour piss out of a boot with the instructions on the heel. That guy's got 500 ounces of gold. What'd you do? You know, all these people with their ideas of what he could have done. Shoulda, woulda, coulda. Well, he did. He did. He bought gold, and he still has it. He's doing well. Yeah. Bark. Woof. Woof. You can go back to sleep. Whatever nap you're having, go back to sleep. The little pupper's in here. Little doggo. She's barking. But, again, I think that taking these positions in gold, ladies and gentlemen, is where it's at. Gold and silver, of course. I mean, I just picked up my little 2-ounce thick coin recently. I'm pretty excited to get that. It's no 500 ounces of gold. But speaking of silver, I was having a conversation. Again, these are the ramblings of the late night Junius Maltby Channel. I want to share with you some information that I was discussing with a close friend of mine regarding silver. And let me get to it. I'm pulling it up now. We were discussing silver the other day, and there's a lot of information coming out about silver right now, and we were doing some research on it. And here's what I got. So, again, we've talked about this here. The silver market shortages are persisting. There's an imbalance between supply and demand. Demand for silver outpaced supply, and this is in 2023, for the 5th year in a row, resulting in a deficit of 142 million ounces. They had to make up for a little bit of it with recycling. In 2024, the Silver Institute predicts a deficit of 215.3 million ounces. So far more than last year's. This is a 17% increase from 2023. And this is a lot of it due to a 1% decline in supply and a 2% increase in demand. So think of that for a minute when you think of silver. 2% increase in demand, a 1% decline in supply. That's a 3% spread. I mean, 215.3 million ounces of silver deficit. There's structural deficits. They're stating there's a structural deficit in the silver market that will continue beyond 2024. And again, this is different. This is gold. I read another article recently that said by 2050, there's almost the amount of available gold in mines and to be mined will be negligible and cost prohibitive. It's almost unobtainable. They've gotten, most of the easy metals have been extracted, and we've talked about this for years, how much of the metal was extracted just in the last 50 years with the increase in technology and the ability to get it. COMEX vault inventories. Silver inventories in the COMEX vaults have been declining, falling from over 400 million ounces in 2021 to just over 291 million ounces. So almost half. They're getting close to that. So again, COMEX vault stores dropping, supply dropping, demand increasing. The LBMA, London Bullion Market Association, the stocks in the LBMA vaults have also fallen sharply, dropping more than 300 million ounces from their 2021 peak. Again, more supply gone, vaults losing metal. According to the data, silver demand is outstripping supply, and this is going to continue. And silver prices are just now finally beginning to play catch up, because as many of you have discussed here and know, some of you have known even, I would say, more so than myself in the past, and had been pointing out because I've always been a gold guy. I'll be honest. I've always been more of a gold guy than a silver guy. And it took me a while to really bite the silver bullet and realize, in looking at data and the numbers and discussing things and keeping an open mind with other sound money friends, that there's a story or part of the story that wasn't making sense when it came to silver, and it's these numbers. It's these numbers. That I think there was tremendous manipulation. We know that. The spoofing, we knew that. We talked about that. It has a major upside to move. I mean, even the ratios of gold to silver present, extraction ratios present in the crust ratio, all that stuff. The amount of silver that's been destroyed over time, the amount of above ground silver that still exists and the amount that's gone, and that kind of thing. There's a lot there, a lot to discuss with that. But here's the point that was in our discussion. I'm reading it right now because me and him were in a chat together in our Signal app. So here's one of the things he quoted that he sent me a link to, and it's on when supposedly scientists believe in such that the Earth will even run out of gold. This is talking about gold again. Scientists believe that the Earth will run out of gold by the year 2050. That's the year they got. Since gold is reused and recycled into other products, it is unlikely we'll really, quote, run out. Mine gold shortage could lead to sky-high gold prices, but this isn't a guarantee. Pretty sure it will be. I'm pretty sure if all of a sudden there's no more gold being extracted and we're stuck with what's left, that's it. Can you imagine? There's no more gold production. That's it. What's there is there. I mean, you essentially would have a serious price disruptions. The price would go anywhere. I mean, the sky's the limit at that point, especially with the infinite availability of inflation and destroying of all of the fiat currencies, the amount that's out there. We've done that Exeter's pyramid. I've showed you the number, how much cash, and we've looked at the U.S. debt clock. We know the dollar to gold ratio. We've read all the outlandish calls of $50,000 to $80,000 per ounce gold. Just yesterday, again, we revisited how all it would take for gold to reach $26,000 per ounce is to perform exactly the way it's been since the year 2000 or 1999, because gold 10x from there. That's it. That's it. That's all it has to do. It's 10 times what it was then. It was $256 per ounce, and now it's $2,600. $2,624, I think, was the high this morning. So there you go. I mean, if you 10x metals from here, you're at $310 silver and $26,000. I think silver's got it much more than a 10x from here. I think we're going to see silver again. I hate saying numbers, but that's what people live off of. That's what creates the conversation. Everyone tries to spitball it, and hey, what I think it's going to be this. I think it's very easily going to surpass all-time highs. Easily. And once it does, I don't believe it's going to retreat below them again. I read this yesterday too. I don't think we're going to see gold go below 2,000 ever again. Never in your lifetime. I do not believe that's possible at this point. I think just like when it passed 1,000, it's gone. Silver, it's harder to pick a floor. It's a pretty volatile chart. It goes up and down. We see it all the time. I used to make fun of it for that. Doesn't mean I don't like it. Doesn't mean I didn't stack it. I think silver at this point, it would be very difficult to ever see it go below $20 or $21 an ounce again. When you look at labor costs, the all-inclusive cost per ounce sold that mines are putting out, when you look at the things we just reviewed, supply deficits, demand increasing, vaults losing silver, and that's probably motivated by them trying to keep the prices where they're at. They can only do that for so long. Once this story continues to unfold, the dollar continues to weaken, the banks lose control, these global economies continue to struggle through this, the wars break out, all these things, all these factors that we talk about and look at that are interconnected and intertwined, this huge web. $100 an ounce, no problem, Todd. Todd Fox says silver at 100 an ounce, not even a problem. Do you remember, I did videos on purchasing power over the years. We talked about, and this goes back into the history thing. And again, if you go into the archives, you can find these. I did a lot of videos on silver in 17th, 18th, 15th century England and throughout Europe, what silver was buying then, colonial America, what silver was buying there, the ancient Greek and Roman empires, how much weight of silver it took to do what and buy what, how much wine did it buy, how much labor did it buy, a lot of that, right? You know, much of the ancient world never ever held or saw a 4.9 silver ounce coin. That was never existed, right? You just saw it. Denarius it was shy of 4 grams of silver. A silver ounce is what, 31 and a half? How many grams? What is it? Hold on a minute. I never remember this. Don't make fun of me for it either. How many grams are in a troy ounce? I just don't care. 31.1, that's right. And it was 31 something. I thought it was 31.5 for a minute. So 31.1. 31.103. So if you think of that, do that 31.1 and you keep that number in your head divided by, let's just call it 4, even though they were shy of that, they're about 7 points. We'll call it 8. So a silver ounce is about 8 denarius. Well, a denarius was about a day's work at some point. So, I mean, could you say this? A silver round, a silver ounce, it's like a week's work. A week's worth of work. How many of you would work an entire week for $30 right now? Nobody would. So imagine if you take the average wages on people and you go, okay, well, a week's worth of work for 8 days, 7.75 days. How much money is that? Now I've come to when I've looked at one of the numbers that sticks out in my head, and this is in looking at history and going through all my coin boxes and all the coins from eras and what did they buy? Oh, 4 crown to a sovereign and how much people lived on. I read recently that, and I was reviewing some of those numbers, it was 4 crown, I think it was, for a family of 4, it was 4 crown. And this is where I don't want to say it because I don't remember exactly if it was a week or a month. I think it was a week. It was a particular time period in England at that. Again, you know, silver, the number that sticks out in my mind when I look at what it used to buy historically over the span of around 3,000 or 4,000 years on average and such, I put the price at a minimum at around $650 an ounce. That's me putting it. It's an easy number for me to remember, $650. And I did that with you guys once in a live, if I remember correctly. If you go back and if you look through the lives, you might be able to find a video. We really break it down and looked at a lot of the old British coinage, what shillings would buy, what a crown and a half crown would buy, and all of those things. And so, you know, $650 to me is not out of the question. I mean, can you imagine $26,000 gold, $650 silver? Meanwhile, you've got all the little zombie creatures that stagger around our communities, pushing their shopping carts, wondering why life is so hard. They're just not going to get it. You can't force them. They're not going to understand it. To this point, if they haven't gotten it yet, it's going to be very difficult. I think that the further we go down this path, the more difficult it becomes to wake some people up out of it. Or maybe it's the opposite. I've heard some people say it's the opposite. Some people say, well, the people are waking up more now than ever. Maybe. I know the information's out there. There's a lot more information, but people are also permanently distracted, and they don't like to believe this stuff because it causes them to have to make difficult decisions. It's difficult to throw off, you know, years and decades of propaganda and wake up out of a matrix and believe that this whole thing you've been living and everything you've been experiencing was one big lie, and everyone's been lying to you, and the government's corrupt and it's evil and it's diabolical, and they're a bunch of debauched, degenerate pedophiles, and you know, you've got the banks that are in cahoots with it, and Wall Street, and the politicians, and the war, and they blow up and kill children, and they're part of human trafficking, and they import drugs, and they destroy ghettos, and everything evil and wrong comes from this like group of people. It's a staggering thing to confront, but it's once you do, there's no going back. Once you realize it, once you wake up to the truths that are out there, once your eyes open, you're like, oh man, the scales fall off and you've got 20/20 vision. You can see it. You can see it clearly. That's just the way it is. But that's it for today, my friends. That's the evening broadcast. I had to come back. I missed you. I saw you guys yesterday, and it reinvigorated me. It was good to come back and to be on here again. Hope you're enjoying it. Hope you're still enjoying the Junius Maltby Channel when I can get here and when we can share these things. So good to have you all on here this evening. It's getting late, so I'm going to end live tonight and encourage all of you to continue doing what you're doing. Preparing, stacking, getting out of the cities, being far away from those danger zones, and recalibrate my invigoration. There you go, G-Dub. I'm recalibrating. Junius had to recalibrate himself. Keep stacking. If you get a chance, grab yourself one of those. Look, I'm not sponsored. Nobody knows who I am. Nobody cares. But that Intaglio Mint coin's pretty cool. I got to be honest. It's the coolest coin I've bought for a long time. So I'm excited to get it. Maybe I'll do a little video on it when it comes. I'll compare it to some real pillar dollars. I only have one. The 1732 to 1771. That range there. I only have one of those. It was a gift from a friend. A good friend of this channel actually sent me that coin, and I'm eternally grateful for it. Pillar dollars are, Spanish silver, ladies and gentlemen, Spanish silver, Mexican silver, something special about it. I don't know what it is. I can't explain it. When I look at a Libertad next to any other coin, there's something about that silver that just makes it more beautiful to me. I don't know what it is. South American silver is gorgeous. It's beautiful. Lovely. Historic in every way. All right. Spall Walker says, keep it rolling, Junius. Keep it rolling what, like tonight? Keep this live going? I don't know, how long are we in? How long is this? How long's the clock been taking? Let's see. Maple Leafs. Maple Leafs are, I just don't like the royalty on them. They're cool. When I was a kid, G-Dub, my favorite part of a maple leaf was how they would strike them, and the leaf looked so real and so three-dimensional. It looked like a maple leaf just fluttered down out of the sky and landed on the back of a coin. And it's beautifully buffed out and shiny. They were so gorgeous the way they did them. The maple leafs back then. I don't have a single coin with Charles on it yet. Not one. Not this Charles. I got some of the other Charles, some of the older Charleses, but I don't have the current King of England. I finished my tea. All right. Ladies and gentlemen, that's it for this evening. I'm going to bid you all good night. All right? So, have a good rest of your night. Keep snacking. Go do a raid on my behalf. If you're in the chat right now still listening, go find yourself one of those Intaglio Mint pillar dollar 2-ounce silver coins. They're on eBay. That's the only place you can find them right now, because Intaglio's out of them. I haven't seen them on any other website. Unless you know of them, leave a link down below or a comment of where people in the chat can find those. They're pretty cool. Check them out. So good talking to you all. Good being here again. All right. Thanks for tuning in, being part of the channel. I appreciate it. Thank you for your support. Have a good rest of your evening.